And welcome back. Now we will take a look at our first candlestick. And the first candlestick is always, or it is the pin bar, because it is a very popular one. It can tell us a lot about the market context. At the same time, it is often used wrong or trader apply it incorrectly. So that's where I want to address a few things and help you understand how to trade candlesticks, how to use the pin bar, and what to look for in candlestick trading. But first of all, what is a pin bar? A pin bar is usually a small candle or a candle with a small body, and then preferably we would have quite a long wick. So roughly something like this in an uptrend, or conversely, if you have something like that with a long wick in a downtrending market. And what are candlesticks? What are pin bars? Pin bars show, as I already hinted, they are rejection patterns or rejection signals. And what do they signal, or why do they signal us a rejection? Let's, for example, look here at this candlestick here. This is a classic pin bar. You can see the price was moving higher and higher, and then suddenly we see such a rejection. The price tries to make a new high. It tries to break higher, but in the same candle, the sellers step in and reverse the price almost to the bottom. You can see the closing price is very near here, the opening price just below that. So it means that from the opening price, the price moved up, and then in the second half of the candle, the price moved down and closed all the way here. So a classic pin bar, and it shows you already that although there were quite a few buyers at first, then the sellers took over and reversed the price. Now, a big problem that many traders have with pin bars is that they enter as soon as they see a pin bar. So in this context, they would enter a sell trade as soon as the market closes the pin bar. And this often leads to wrong assumptions or wrong trading ideas. And often you will get a loss using a trend line pin bar this way. Because a pin bar is not a strong enough signal on itself, there is a pattern which we will get to know later. It is called a hanging man, which can look quite similar, and it is the exact opposite signal. In this case, if the price would print this, if we didn't know what has happened afterwards, it could as well just be a continuation signal. So we cannot just trade a pin bar, because we will often run into failed breakouts. So the first rule of a pin bar is that we only trade triggered pin bars, which means that we look at where is the low of the candle, which is in this case here at, let me delete that, which is here in this case the low of this wick here. And once this low is broken, then generally that's the idea where you enter a pin bar, because it confirms that the momentum is with the candlestick. Here we have then another very interesting pin bar example. It is just a few candles after. You can see afterwards the price moved a little bit lower. Eventually we found support here at the previous swing low. Very nice context here. And then the price moved back up again. We broke above the previous highs here briefly, but the price did not have enough buying power. There were not enough buyers in the market to continue the uptrend. We again leave a pin bar. A strong wick to the upside indicates that at first the buyers tried to rush into the market, but then the sellers came in and reversed the price immediately. And you can see afterwards the price then turned into a stronger downtrend. And here again, when does the price trigger the pin bar? It is here basically on the open of the next candle, because the open is already here well below this closing price and below the pin bar. So first rule is that you should always wait for a triggered pin bar. Never just blindly trade a pin bar. That is very important. Also, to increase the chances of successful pin bars, you should always trade them at a market or with market context. So you're not going to trade blindly every pin bar here wherever it pops up. But you look for market context where it actually makes sense. For that, we have taken a look at support and resistance previously. This is the same chart that we drew together earlier in an earlier lesson when we're looking at support and resistance. And now you can see why this comes in handy. For example, here's a little pin bar just at this flip zone. Let me zoom in a bit. Here you can see the price broke through this support and resistance area here. We came back into this area, then we posted this pin bar. This pin bar now shows that the market is trying to break higher, but the sellers are defending this price level. They don't want the price to make a new high, and so this is defended by the sellers here with the pin bar. They step in, and then they drive price lower here afterwards, after this pin bar. So this is a nice rejection, and you can also call this a retest pin bar. Very nice confluence and a good way how you can structure your trades. You don't trade pin bars or any candlesticks for that matter, or randomly wherever they pop up, but you always look for where does the candlestick actually make sense at support and resistance, at previous highs and lows, and you don't just blindly trade them. Here, for example, is a good pin bar where we have a pin bar. You can see that here price moves up after this uptrend, then we close here, but you can see the next candle never triggers this pin bar. If the next candle doesn't trigger the pin bar, you should really think about the market. Do you really want to be short in the market? Preferably you would pull your limit order if you're going to enter with a limit order, or you at least decrease the position size. So you can see here the next candle did not trigger the pin bar, and in such a case I would prefer to wait for another signal and not get too hung up on one signal or one candlestick. As I said, there will always be a next trade. There's no real need to get too attached to one single trade. There will always be a next trade. Here is another nice example where we even have a double pin bar. So let me go through this very nice chart example here together with you. Let's zoom in a little bit, and you can see the price was moving lower and moving lower. Here we're coming from the left hand side, and then we see here our first pin bar. After a strong price move, price barely broke through those previous lows. So that's already, as we know, when the price struggles to make a new low, or when it just barely breaks the low, then this can already be a sign that the market is not as strong anymore. Also, when we see such deep correction waves, that should really set our alarm bells off. And you can see we post a pin bar. Again, this barely gets triggered here. We don't really close, or we don't really push into a new high, just barely make it. And what happens? We even make another pin bar. So this is very interesting. If the first pin bar doesn't get triggered, but the second pin bar, the second candle afterwards, or the first candle afterwards is also a pin bar, this really reinforces the signal. It shows that, okay, the sellers in this case, they are stepping in once again, trying to make maybe a final attempt to continue the trend to the downside, but again, they're failing. And if then the market, or if then the next candle breaks, this could even be a stronger signal. We will see that later when we take divergences. There's a concept called double divergence. If you have two signals right after each other, they can reinforce themselves if it gets triggered. If the next candle wouldn't have triggered this one, I would have probably stayed away from it, because there is not really any clues, and the battle between the buyers and the sellers is just too intense, and you don't want to get caught in the middle of that. But you can see here afterwards the price broke the candle here and broke the pin bar quite significantly, and then we started here this strong uptrend. So that's a very nice signal here where we have a double pin bar. Here another one, we just scroll a little bit forward, and you can see we were here, we had our previous support, and then the price moves back into this. It fails to reach the absolute low, but you can see we make a little bit of a pin bar, and you can already see that after this strong drop, before that price already slowed down significantly, and there was not really a lot of selling support in this market. Then we have the little pin bar here, which shows, okay, the sellers try to make a final move, but they got rejected, and then the next candle, the pin bar breaks here, and then we shoot up and start this nice uptrend. Then we can just follow the price, and you see we have here our previous high, and as I said, previous highs can be a very, very important point as well. You can see the price is trying to break out. You can see that here at this point even looked like quite a strong breakout. But then the next candle shows here a pin bar. It shows that maybe the breakout after all wasn't that strong, and maybe it was just a final last attempt of the buyers to mobilize all the strengths, but they failed. The seller stepped in. The next candle after the pin bar was or did trigger here the pin bar, and then you can see we don't make a big move, but this is already good for a small trade, a little profit, and always take what is safe. And the pin bars can help you get into such trades. Later on, we will learn anyway how to manage such trades, how to move a target, how to set targets, how to manage a trade. So let me share one last example maybe, and then I think it becomes clear how to look for a pin bar. And here is a pattern which I really like to trade or like to observe as well. So here we have a pretty well defined range, I would say. We have a clear boundary to the upside. We have quite a clear boundary to the downside. And if you have such a pattern, look for pin bars or any other confirmation signals that we will learn at the extremes. Also, you can quite nicely use pin bars at trend lines. When you see a pullback into a trend line and you have also a pin bar, this can be quite nice. So first of all, here at the bottom, we do have a small pin bar. Once the price moves back into the previous lows here, you can see that the candle just touches it almost perfectly to the pip, and we leave a pin bar here. And then the next candle, it triggers the pin bar. It does not take off immediately, but you can see eventually we make our way back up to the top and have a nice uptrend here after the pin bar. Then here is another very important one. It is sometimes referred to as a trap pattern or a squeeze. You can see we are breaking out of this pattern. It looks like the market is ready to start an uptrend. But when we zoom in, what can we see? Just 2 candles afterwards, you can see we have a huge pin bar here. First, this is not a real pin bar because the body is not really small. But then the candle afterwards, this is then the pin bar that we need as our clue. You can see that the price moves higher, gets rejected, closes here at the lows. The next candle triggers it barely, but it is moving a little bit lower. And then afterwards you can see we don't only drop to the bottom of the range, but we start a completely new downtrend. So this is a very important lesson as well, and a good example where you can use a pin bar as well. So you can use them, as I said, as a support and resistance retest break. We can use them in pullbacks and ranges at previous highs and lows. When we see such a failed breakout or a trap pattern, they can be very, very great confluence signals. Maybe one more signal here, because I just found that in the markets here. And you have here a very well defined support area. Here is, we have a low here, not too significant, but here it is quite significant, a strong turning point. Those are always important to be aware of. And then the price comes back into the level with a strong drop. Just imagine how it looked like at this point when the candle formed. It probably looked like the market was ready to break out and start a complete new downtrend. But then what happens? The next candle, or in the same candle, the price reverses, closes here, and then the next candle breaks this with this pin bar, and then starts here a nice move to the upside. So you can see pin bars are very good when you trade them at confluence levels, previous swing highs and lows. They can add a lot of context to your trading signals. And so I think we can conclude that the pin bar is a very interesting one. We will now look at a few other candlestick patterns, and in the next module we will take indicators to the mix and see how we can use indicators as well to improve the quality of our setups and our trades in general.